Did you know that 29% of mortgage loans either don't close or they close late? I'm sure you've had friends or family who have had real estate transactions fall apart because the buyer's financing fell through. So today I'm with Mark Jaynes, co-owner of Rapid Mortgage Company here in Columbus. Mark, what are the 3 questions that you should ask the buyer's lender before accepting their offer?
So the first and most important question is, how far has the buyer gone in the approval process?
Okay.
A lot of people don't know that there's different levels between pre-qualification, pre-approval, or actually being pre-underwritten.
So pre-qualification, what does that mean?
Basically, pre-qualification, all that means is that we've talked to the person on the phone, gotten basic information, pulled credit, and their credit score qualifies, but we haven't really seen anything documenting. We're basically trusting the buyer's word at that point in time.
So you have a credit score, and then basically just verbal information that the buyer has given you that you're just trusting is accurate.
Correct.
Okay, so that seems like a pretty low layer, a low level of qualification.
Absolutely.
Okay, and then the next layer we have is pre-approval?
Pre-approval, yeah.
Okay.
Yeah, so pre-approval is really kind of what the norm is in the industry. That's where the buyers actually supplied documentation to the lender. So not only have they told us where they work, how much money they make, we've actually seen pay stubs, we've seen W-2s, we've reviewed the credit, we've looked over everything and actually run it through what they call an automated underwriting system.
Okay.
So we can actually run it through Fannie Mae or Freddie Mac's underwriting system. It comes back with an approval, and that's when we consider that to be pre-approved.
Okay, and then you have kind of the gold standard is it even called pre-approval or what is it?
So people call it different names on
Okay.
it. You know, we refer to it as pre-underwritten. Some people refer to it as pre-commitment. Basically what that means is not only is it the loan officer that's taken a look at it, right? The loan officer's reviewed credit, looked at all the income, they've made their best decision on it, but they're not the final decision maker. The underwriter is. So a lot of lenders wait until they're actually in contract to ever show it to an underwriter. So then you run the risk of a buyer being pre-approved, but then the underwriter gets her hands on it, has a different opinion of the income, and now the loan's not approvable, which is why that stat you threw out on 29%, that's where deals fall apart, is when they get in front of the underwriter. So we go the extra step, to actually underwrite the file and get it to that underwriter that's going to make the final decision before we ever even issue that pre-approval letter so they can shop.
So very few deals fall through for financing reasons when the buyer has been fully underwritten, is what you're trying to say?
Yeah, that's
Okay.
correct. But unfortunately, a lot of lenders don't go that step. So that's why it's really critical to at least know whether they're just pre-qual, pre-approved, or pre-underwritten, because you may have a great offer from the standpoint of it being exactly what you asked for on your list
Right.
price. But if that lender can't close for that buyer and you passed up another one that was only $1,000 less, that's a big drop. Remarketing the property, doing all those things.
So second question that we talked about earlier that you should ask the buyer's lender has to do with the timeline, right? So tell us a little bit more about that.
So that's just another key question. You write a contract close date into the contract, but unfortunately a lot of buyer's agents don't really ask their lender first how long they need to close.
So how long does the lender need to close this file?
Absolutely.
Okay.
Yeah, because it's going to tell you 2 things. One, can they even deliver on the date that you put in the contract? So if there's an offer that's supposed to close on August 30th, and that's only leaving you 29 days, and the lender says they need 40, you've got a problem right there, right? You either need to renegotiate the contract for a real closing date, or maybe look at a different buyer. The second thing that comes into play is the confidence level. So there's not a magic answer, right? Some lenders can close in 21 days, some need 30, some need 40. As long as it fits in your contract timeline, that doesn't necessarily differentiate, but it's more the confidence. If they say, I only need 21 days, that lets you know that buyer's ready to go, they're confident, and they're really, really, believe in that buyer's ability to perform. If they say, I'm not sure, or once we get into it a little bit further, we'll let you know, that's a big red flag that they haven't really been that far down the approval process, and that loan officer's just not confident they're going to be able to deliver.
Question number 3. Have you verified the borrower's down payment funds? Tell us a little bit about that, why it's important.
Sure. So the biggest thing with down payment funds is a lot of times lenders are just looking at credit and debt to income ratio. So they're looking at the income piece and saying, yes, they qualify to buy a house at $300,000. What they don't do sometimes is verify that the borrower actually has the down payment money to bring to closing. So whether they're bringing 3%, 5%, 10%, a lot of times lenders make the mistake of just assuming that they've got the down payment funds versus going the extra step of actually getting bank statements to document that they really have it. And that's where a lot of deals really fall apart, is the buyer qualifies They can afford the monthly payment, but they just underestimated the amount of
Yep.
cash that was needed to close the transaction. And that's usually the thing that bites you a week before closing, because all of a sudden they're told they need to bring 30,000 to closing and they only have 21. And now you've got a major problem. So you really need to, go with a lender that's actually verified that information up front.
So if you were going to get 100% on these 3 questions, right? How far are they in the approval process? We want the borrower to be pre-underwritten.
Absolutely.
Right? Question number 2: How long does the lender have to close? How long does the lender need to close the transaction? We just want to see that the timeline in the contract, the lender is able to meet that deadline. Correct?
Yep, that's perfect.
And then number 3, we want to make sure that the lender has verified the income needed for the down payment and closing costs of the borrower, correct?
Right, yeah, you want to make sure they've got not only the income qualification, but they've actually got the
Yeah.
money already for the down payment.
Now, Mark, if whether there's somebody's out there, they're a seller, they're a buyer, or they're an agent out there that wants to chat with you more about this and do a great job for their clients, what's the best way to get in touch with you?
Best is just on the phone, so 614-845-5202.
Cool. Everybody, thanks so much for tuning in, and hope you have a great day.